Boom shakalaka, what is going on everybody? Randall here from Crypto Love, and today I have a video for you about how to build a $500 cryptocurrency portfolio. Now, this doesn't only apply to $500. It could be $1,000. It could be $5,000. It could be $10,000. But a lot of people get started with something small. That's a great way to get started. And then you can build up from there. Now, in this, I am including some brand new strategies that I've been thinking about for the past few weeks, months, whatever it's been. So I'm going to include those in there. I'm also going to show you my portfolio at the end of this so you can see what I'm doing, where if my money is where my mouth is. And yeah, so that's it. So before we get started, just want to say thank you to everyone subscribing. Thank you to everyone mashing on the like button. Guys, if you want to win this shirt, make sure you comment on this video and every other video to enter for your chance to win. So let's get started. Now, when we're talking about portfolios, there are some strategies to be mindful of. So in terms of strategies, we have risk and, and complexity. Now with risk, we have high risk, low risk, medium risk. So high risk, you have the greatest chance for gain, but you also have the greatest chance for loss. So this would be going for some very speculative cryptocurrencies out there. Ones under 100 or 200 or 300 in CoinMarketCap. Low risk are the ones with the least potential for gain, but also the least potential for loss. So these would be ones investing in like the top 1 to 5 cryptocurrencies out there, Bitcoin, Ethereum, Litecoin, things like that. Medium risk is kind of a mix of both. So having a little bit of the high risk, a little bit of the low risk, kind of spreading yourself out. Then in terms of complexity, we have simple and complex. So simple is stuff where you set it and forget it. And I'll go over some strategies for that. Now that's for people who have some more money than time, pretty much, because you have, you just want to set it and forget it. You leave it. You can put money in there from time to time, but you don't have to think about it. And then there's the complex for the people who want to, change things all the time. And we even have some strategies going into complex things where you could change your portfolio pretty darn often. So we'll get into all of that coming up. To begin with, and to end with, you want to have a plan and stick with it. So basically with your portfolio, whatever you're doing, you want to have a plan. It's very important to have a plan. So make sure you have that plan and then stick to that plan, because the more you change things up, the more you go all over, the less consistency you'll have, the less direction your portfolio will have. So if you pick something, stick to it until you have a much better reason to change it. The last thing you want to do is just go buying cryptos because someone talked about it on a YouTube video and it sounded good. Because guys, there's 1,600 different cryptos out there. There's a lot of places to put your money, and you'll see with my portfolio coming up, I don't invest in every single cryptocurrency. I invest in a good number of them, but I don't invest in all of them. And the reason is there's just so many. There's a lot of good projects. There's some great projects out there. There's a lot of good projects out there. There's a lot of really shitty projects out there. So, you kind of have to figure out what works for you and how to go ahead and do that. Now to begin with, simple. Guys, if I did not have this YouTube channel where I was talking about Bitcoin and cryptocurrencies all the time, this is what I would do. I would dollar cost average and hodl Bitcoin. Simple as that. I would forget about it. I would never even look at it. I would just set it up on Coinbase, dollar cost averaging, put in a fixed dollar amount every Friday, or if I want to do it twice a week, every Wednesday and Friday, because those are historically the least expensive days for Bitcoin. And I would just forget about it. I would go on with my life. I would go do whatever work I had to do. And then in 3 to 5 years, I'd look at my balance and I'd be like, holy shit, I'm loaded. So that would be the simplest thing to do, because then you don't have to worry about all the complexities. You don't have to worry about all the big ups and downs and partnerships and things and blah, 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 blah. But yeah, that's the easiest thing. Now, dollar cost averaging works because basically you're buying a fixed dollar amount on a consistent basis. So sometimes the price will be high, sometimes the price will be low. When the price is high, you buy less. When the price is low, you buy more. So you get a nice average price. And this is great for volatile investments that you don't know where the price is going to be. So that's what I would do if I didn't have this channel. But that's a nice simple solution. So for you guys who just want to set it and forget it, boom, that's it. The next one would be the Coinbase Cryptos. Now, Coinbase is one of the largest exchanges out there, all right? Especially, this is one way that a lot of money gets driven into cryptocurrencies because it's a simple exchange. Well, Coinbase Cryptos, until recently, this was just buying Bitcoin, Bcash, Ethereum, and Litecoin. But just recently, they announced they're going to add Ethereum Classic as well. So that would be just investing in those 5 cryptos, because guess what? Those 5 cryptos account for 2/3 of all the market cap of cryptocurrencies out there. And those are the ones that are most likely to receive institutional investor funding when that stuff comes in. So those would be things that would be worthwhile to take to consider buying, because that's a simple solution. They're easy to acquire. You don't need to open up accounts on exchanges, and they're likely to go up over the long run. They're all very, very safe options in terms of cryptocurrencies. They've been around for a long time. They've been vetted. The SEC says they're not securities, so all those things. The next strategy would be doing the top 20. Now, it turns out the top 20 cryptos account for over 95% of the total cryptocurrency market cap. So if you invest in these top 20, that's pretty much, if the market goes up, guess what? You're probably going up with it. If the market goes down, you're going down with it. This is similar to something like an S&P 500, an index fund. Now, Warren Buffett himself actually had a bet going for a long time where if any trader could do better than the S&P 500 for an extended period of time, he would give them a lot of money. Never actually happened, because for most people, they can't do better than just investing in the S&P 500. So this is an easy way to do it. You can invest in all of those, and then there you go. You have your own little index fund there. In terms of risk, these are all almost pretty much very, very safe bets. And then you may not find huge exponential gains like you would find on some other stuff, but you're definitely not going to find huge losses out of sync with the market. The next would be a balanced portfolio. So this is for, the accountants, the engineers out there, the people who just want something that's very stable, okay? So here you would put 25% in the top 3 cryptos, okay? At the time of making this video, that would be Bitcoin, Ethereum, and Ripple. And then you would put 50% in the top 20, because that way you have 75% of your money in the largest majority of the cryptocurrency market. So within that 95% of the market cap, you have 75% of your money. And then you have 25% for speculation, for cryptos lower down on the list, ones that you may see bigger gains from, but you may also see bigger losses. Now, this is considered balanced because it kind of spans the whole field of the really large cap cryptos, the medium cap cryptos, the small cap cryptos. That way you can kind of have everything, but it hedges you against the risk of those smaller cap cryptos. Next one is the speculators and ICO investors. So these are people who want to put more money into the smaller market cap cryptocurrencies because there's a bigger chance for gain. And it's pretty much simple, because it's very difficult for a very, very large cryptocurrency to 10x or 100x, something like that. However, for a small one that may be under the radar, that may not be on any great exchanges, that may not be known yet, there's a great potential for that to 10x, 20x, go up significantly. So that's what the speculators will do. Also in that group would be ICO investors. Now, ICOs, for a while, it was pretty much any ICO you invested in, you were getting like 3 to 20% returns on it. Nowadays, because we're in somewhat of a bear market, people aren't that interested in investing in ICOs. So ICO investors aren't seeing all that much money in terms of returns. Also, there's a lot more people buying ICOs. So in order to get into the good deals, you have to get into the private sales, the pre-sales, things like that. And those are hard to do. So both speculators and ICO investors, they're kind of panning for gold. There is the potential to earn really significant returns, but there's also potential for quite a bit of loss. And lastly, we have the risk taker. So this is the person with the all-in mentality. They may have a few $100s and they're just going to put it on whatever coin is ranked 653rd on CoinMarketCap, and then cross their fingers, hope they can double their money, triple their money, whatever it is, because stuff down that low, yes, it can pump, it can dump. You just got to hope you can get that pump and sell it beforehand. Now, this is a super risky way to do it because you can go bust, all right, and then you have nothing. But sometimes, if you're lucky, you can make a good amount of money. It's just doing this time and time again That is difficult to do. So these are kind of the basic strategies that I've outlined here. Now I have a few new strategies that I've been thinking about that I just wanted to discuss with you. And maybe they're not exactly new, but ones that I just wanted to discuss with you that I haven't talked about previously. So the first one would be like a staking portfolio. And a staking portfolio is basically you own cryptocurrencies that generate passive income for you. So basically you get these cryptocurrencies, you put them in whatever wallet is a staking wallet. That way you start earning interest or a percentage automatically. You don't even have to think about it. Then you can own those, you earn more, and then, you just set it and forget it. So some of the most popular staking cryptocurrencies out there, Neo, huge one. You stake Neo, you get Neo Gas. VeChain is a new one with VeChain and VeChain Thor. Also things like Pivx and No Limit Coin have wallets where you can stake them. And then BuyBox token isn't exactly a true staking thing, but basically you get returns with it if you do one trade a week. So you can get up to 20% returns just holding BuyBox tokens and doing one trade a week. So those are all kind of staking portfolios that you can have out there. It just helps you earn a passive income. And that's nice because everybody wants that passive income, make money for doing nothing. This one I haven't talked about before, but the Chinese portfolio. And really what made me think about this was that Chinese billionaire talking shit about all the different Chinese cryptocurrencies out there. Well, they are a lot of really good projects, at least in my opinion. He seems to think not. But just having a Chinese portfolio, because in Asia, they are leap years ahead of the rest of us in terms of technology. I think in terms of blockchain adoption as well. Well, a Chinese portfolio would be things like Neo, Tron, Binance, VeChain, Qtum, Ontology. That could be a very interesting portfolio. And this last one here that I wanted to talk about is one that I've really been thinking of. And it might make sense, but it's one that you have to adjust quite a lot. So this would be one of those complex portfolios where it's always changing. But this is a weighted dominance. So this is based on what you see above my head, the total market cap dominance. So based upon where things are in terms of Bitcoin dominance, that's how much of that you would have in your portfolio. So for right now, you would have 42% Bitcoin, 18% Ethereum, 7% Ripple, 5% Bcash, 2% Litecoin, 1% IOTA. But of course, that would always change as markets fluctuate. It would be very difficult to do. I've considered doing this just for how much Bitcoin I should have in my portfolio. But that's just my thoughts. Brand new portfolio idea. Wanted to bring that one to you. So, as you guys may have been questioning, what does my portfolio look like? Pretty straightforward, pretty simple. I have 30% Bitcoin, 26% Neo, 18% Ethereum, 5% Binance, 5% Ontology, 3% Lisk, 2% Deep Brain Chain, and 11% of everything else, which involves 27 different cryptos. So there's a whole bunch of different ones in there. A lot of the ones that I talk about most commonly would be in there, just in small portions. Now, why like this? Well, I'm somewhat risk averse in terms of cryptocurrency. I find that the risk for me is just putting all my money in cryptocurrencies. Okay, that's the risk for me. And then my goal is to keep as much of that and grow with the market. Now, I realize I may miss out on some opportunities because some people could invest in something, it could blow up, but it's really hard to predict that stuff. So I'd like to kind of just follow the market up with things like Bitcoin, Neo, Ethereum, and Neo I use as staking there. Now, this portfolio would follow the balanced portfolio type of thing where I have roughly 25% in the top three. Actually, I have more than that. I have 48% in the top three, so Bitcoin and Ethereum. Okay, but then in the top 20%, I have about 75%, so that'd be Bitcoin, Neo, Ethereum, Binance, Ontology, and then everything else. So that's my portfolio. Last question is, what are you going to do? Okay, so I've showed you a little bit about portfolios. I showed you what I'm going to do. Now the question is, what are you going to do? What have you been doing? All right, and really, if you have things that have been working for you, definitely share them down below because everybody else could benefit from knowing that stuff. Let me know what you think. I hope you guys enjoyed that. Like I said, subscribe on the video, like it. If you want to win the shirt, comment on it, and I will catch you guys later. Hope you enjoyed that. All right, peace.